Welcome to Joe's Trading Channel, your go-to source for market insights that cut through the noise. In each video, I break down the latest market views from top experts and add my own takeaways to help you make smarter investment decisions. Today, we're diving into a fresh market outlook from one of the most influential voices in investing, Rick Rieder, Chief Investment Officer of Global Fixed Income at BlackRock. With decades of experience and trillions under management, when Rick speaks, the market listens. First, Rick highlights a surprising resilience in the U.S. economy. While many feared instability after political transitions and global shocks, the economy has held firm. Rick reminds us, the U.S. rarely enters recession without a major external shock, and so far the fundamentals remain intact. However, Rick warns about a fresh shock on the horizon, a 145% tariff on Chinese goods. He sees this as a significant inflationary risk that could chill both consumer and business activity. He doesn't call for a full-blown recession, but he does expect a slowdown. His words, "We may just see a pause." Despite growing uncertainty, Rick sees the market pricing in 8% earnings growth, a number he finds too optimistic. He gives equities a C- grade, saying valuations aren't justified by fundamentals. That said, he acknowledges strong technical momentum could still push prices higher in the short run. When it comes to recession fears, Rick sees a short and shallow scenario as most likely. But he's clear, multiples don't need to crash. High-return sectors like tech and AI-rich megacaps can still support fair market valuations in the 17-21x range. All eyes on the Fed. Rick doesn't anticipate an immediate rate cut, but says June could be a pivot if job data softens. He's watching employment closely in key sectors like hospitality, healthcare, and education, which have been the biggest post-COVID job creators. On the data front, Rick usually downplays soft sentiment surveys, but this time he sees alignment. With fundamentals, he expects hesitation to emerge in hard data soon, giving the Fed justification to shift its stance. So, where is Rick putting money to work? Right now, it's the front to belly of the yield curve, with bonds yielding 6.5% to 7%. These shorter duration bonds offer solid returns with lower risk. While he's long-term constructive on equities, near-term he believes bonds provide better value. To sum up, here are Rick Rieder's 7 key takeaways. The U.S. economy remains resilient. Recession is not guaranteed. China tariffs pose a real risk for inflation and demand. Markets are pricing in too much optimism. Valuations are stretched. A mild recession may happen, but multiples can hold thanks to tech strength. The Fed could pivot by June if labor softens. Keep an eye on jobs. Sentiment may match reality. Watch for weakness in hard data. Bonds are attractive now, especially short to mid-duration, offering solid yields. That's Rick Rieder, BlackRock CIO's viewpoint for current market. Thanks for watching today's Breakdown Market Outlook. If you found this helpful, don't forget to like, subscribe, and hit the bell icon so you never miss out on expert insights and trading takeaways. Got a question or want me to cover a specific topic? Drop it in the comments. I read everyone. Until next time, stay informed, stay sharp, and happy trading.